Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Monday, so you're going to get your Brooklyn weekly market update. John, let's get right to it. I'm looking at Brooklyn supply. Looks about flat, 3,510 units trying to sell. Show me that chart.
Yeah, I mean, Brooklyn supply, much like Manhattan supply, has been lackluster so far. And again, it's another week of lacklusterness. We're up not even half a percent, 0.4%, if you want to bubble that in at home. So supply is looking flat here, Noah, and this is the time when supply usually starts rolling over. So we
Yeah.
we might start seeing a decrease in the overall nature of supply here in Brooklyn very soon.
Yeah, if you're a buyer in Brooklyn and you were expecting a whole listing wave to come on for the end of the year, it already happened. So what you see is what you get, and there's a good chance I agree with you, Johnny, that as we get into November and into those holidays, that's going to start going down until the next listing wave, which is going to be February, March, April of next year. So keep an eye on that, Johnny. Let's move over to Brooklyn demand pending sales 1,989 under that two handle, Johnny. Show me that chart.
Yeah, below that two handle for the first time in a long time, down 3% on the week. And again, much like Manhattan, this Brooklyn market is basically resetting, and we're trying to find that new level in pending sales. Now we're in the middle of the active season, so we're still waiting for these contract signs to come in. But it's still ticking down here. No, we're now below the 2020 lines, so you can see that we're still trying to find that new level in Brooklyn.
Yeah, both markets are resetting. I love that you're saying that. I think Brooklyn's resetting at a muted pace relative to Manhattan. I think the Manhattan reset was a little bit more notable. The Brooklyn reset was probably a little less so. Sorry to say that to buyers who are looking for a steep negotiability leverage. And when I look at the market pulse in Brooklyn, Johnny, it's at 0.57 right now. You could see that it fell, right? You could see that it fell. It never really got to buyer's market territory, but
Mhm.
take a look at this. Take a look at that little point right there. Now, I don't know if that is going to continue and actually be the start of maybe a little bit of a recovery right there. But if we were looking for signals that the market may have bottomed and maybe starting to come back a little bit, that is kind of what you look for. We talked about that on Friday. We heard Mara's podcast last week that every one of you guys will get this week soon. So I don't know. Maybe something is starting to happen, but I think we need to just mute our expectations on where we're supposed to go from here because we're expecting record activity and this season may not get it. Let's go to the weeklies, Johnny, and see if there's any clue there. We'll talk more about that in a second. Supply in Brooklyn, 180 things. That's down 15%. Johnny, show me that chart.
Well, I think that's your smoking gun right there, right? Weekly supply is down nearly 16% from the week before. And that's really what's sort of supporting this market pulse is that we've not seen that wave of supply come in. So again, if you were expecting a listing wave that befits the normal fall season, you just didn't get it. It was sort of just like the zephyr that sort of, ruffled your hair a little bit. It wasn't really anything like a passing train that you would have expected. So I mean, look, with weekly supply down 16%, and we're sort of headed into the lows of the year. I mean, you can see this chart, we're well below the 2020 lines, the 2021 lines. Supply in Brooklyn is anemic, and that's what's sort of supporting that market pulse.
Yeah, John, you are spot on right there. And, I could relate to the whole ruffling of the hair thing. So I could feel what you're saying in terms of that. Let's go on to contract signed in Brooklyn, Johnny. 120. That is up nicely for the week. I'm not going to get too excited. 1 week is not a trend make, but that is what I wanted to see. Johnny, show me that chart.
Yeah, I mean, we're up roughly 19% from the week before, but I mean, again, you look at this contract signs and you look at sort of that level of where it's at, and it's nowhere near where it was last year or the year before. So the Brooklyn market was in a seller's market rather for a long, long time. We haven't ticked down to a buyer's market. We're a much more natural market, and you can see that from the level of contract signs here, right? They're hovering right around 100, whereas last year at this time they were close to 200. So volume has certainly come down, but it's still, right now sort of holding steady at a much more seasonally appropriate level.
Yeah, and this whole buyer's market, seller's market lingo, let's just be clear on what we're talking about here. We're talking about leverage advantage. That's it, guys. We're not calling bottoms. Like, I mean, you say a seller's market, oh, he's calling a peak. No, I'm not. I'm just pointing out that sellers have an advantage, a leverage advantage in the market. They have rising price action. They have high deal volume. There's a tight bid-ask spread. They're moving properties quickly. That is the characteristics and attributes of a seller's market. And when you look at a buyer's market, the characteristics of that is going to be lower volume, more negotiability for buyers, a wider bid-ask spread, maybe rising supply, even though we're not really seeing it right here, and generally declining price action. So, we're looking at this whole, it hasn't really hit the buyer's market yet. That may be true, but you know what? I just want to point out, because there's a lot of misunderstood concepts with buyer's market, seller's markets, and labeling them as calling a top or calling a bottom, when all you're trying to say is, hey, buyers out there, you have a leverage advantage. Okay. It didn't get fully into your favor yet in Brooklyn. In Manhattan, you did. In Brooklyn, it didn't. So we're going to find out. This is what I was saying before. Okay. This contract sign number right here, 467. Okay. We're starting to see, finally, it's turning around and going up. However, this needs to go over 600, Johnny. This needs to go over 600 to like 620 or so to get into the seasonal par of Brooklyn. Manhattan needs to get to upper 800s. Both of them are not even close. So what we're saying is that it looks like the active fall, the active decline has abated, and it looks like we're at this new level and we're starting to show a little bit of activity, but that activity is by no means anywhere what we're used to. It's still below. So that's very important to point out, because we don't know if this is going to turn into a recovery or if this is one of those false breakouts and then we're going to have another minor wave down ahead of us. We don't know. Let's shift over to the listing discount in Brooklyn. Johnny, why don't you take us from here? What am I looking at and where is this trend?
Well, you got a couple bars here, right? You got the black bars, you got the red bars. The black bars, the discount from the original ask. The red bars, the discount from the last ask. And we can see the last few months. I mean, this stops in August, right? So we want to give time for those sales to close and be recorded so we can kind of appropriately calculate it. And you'll notice those last ones are a little shaded lighter because we're still waiting for that to be totally filled up. But discounts are rising. And I think, Noah, this echoes back to your point about what is a buyer's market, what is a seller's market. Really, we're talking about who's in competition. Are sellers competing? If so, it's a buyer's market. Are buyers competing with each other? Then it's a seller's market, because buyers are going to jump over each other. So when you see rising discounts like this, it sort of hints at the idea that, all right, well, maybe sellers are a little bit more in competition because they're working to get a deal done. But, shift back. Look where we were in 2020, early 2020. So this market was doing a lot more volume, but it was still sort of a much more slanted toward buyers. I mean, those discounts were in the 5% range. So we're not even there yet, even though we're in a weaker market. So yes, I mean, certainly Brooklyn has slowed down, but sellers still retain. It's a much more balanced market. It's not like sellers are, having fire sales yet here in Brooklyn.
Yeah. And yeah, Johnny, that's a really good point. And I just want to point out also that we may be there right now. I mean, we are in October, right? This is going to contract signed in August, because we have to wait for those closings. We talk about this all the time, because the bottom is going to reveal itself after it happens. And you're going to be past it, and you're going to look back in the rearview mirror and say, oh, there's the bottom. And you go, oh, well, I want to go back there and get it. It's like, you can't. You got to hit the bottom while you're in it. So this may be up in 4.5%, 5% territory right now. We still have August. We still have September. We still have the October deals. And this bar, we're not even going to find out this bar until January of where we are right now, January or February. So if we do, I just want to put this out there. If we do find out that Q1 next year is ultimately the bottom of this cycle, and then Q2 and Q3 start to show a recovery, then we are correct in at least saying that this market has shifted. The move has happened. We are now seeing some stabilization. We're seeing slight increases in deal volume, which is the first sign of what you're looking for in a down market to come back a little bit. What I question, Johnny, and I just want to make sure every one of my audience knows this very clearly, is I don't know where we go and if that continuation happens. Everyone, oh, bottom's in. We just fly from here. Not necessarily. You could stay at this level. You could even be choppy. And we could even see another little minor wave up or a little minor wave down in the future. That has not dictated itself yet, John.
That's a great point. And I think, to continue that point, one of the things that we have not seen in this market that I think some markets across the country have seen is we have not seen that wave of selling hit. So we've not seen that inventory really climb. So, when you look at those rising discount levels, yes, you're absolutely right. They could be around 4%, 5% right now. But the fact remains that sellers aren't dumping inventory. I mean, we just looked at where supply is, we looked at where weekly supply is, and we're not getting a wave of inventory, which tells me that even though there might be less buyers, there's just less sellers. And so everything is kind of ratcheted down. And so that competition level sort of stays. Maybe it's a little bit more sellers are competing, but not much more.
Yeah. There's no mass panic. And sellers, they're choosing, hey, you know what? If I'm not going to get my bid, I'll just choose not to play in this game right now. I'll take other alternative actions. I'll rent my place out. Strong rental market. Johnny, thank you for pulling up all this data. Very helpful to see this Brooklyn market. I am Noah Rosenblatt. That's John Walkup. We are both from UrbanDigs. Don't forget, you guys got questions. We got answers. Please visit our forum over there. If you want to see any of the charts that Johnny's whipped up today, it's going to be right over here in just a few seconds. If you guys have never tried UrbanDigs before, give it a try. 2 weeks free. If you guys need advisory services, contact support@urbandigs.com. Otherwise, this has been your Brooklyn Weekly Market Update, and we'll catch you next time.